Well, another big question mark is housing. Fears that rising rates could cool the market going forward. To Ackman-Ziff Managing Director Jason Meister on whether or not those fears are warranted. Jason is also a member of President Trump's 2020 Advisory Board. Let me start with where I finished off with Jack. Do you think that there is going to be some way to prevent China from doing what they've been doing for decades, stealing our best and our brightest inventions, and yet at the same time reopening some of what's closed down and trade with them?
Look, I think that we have a president that is a deal maker. I think that he knows how to negotiate deals, and he's done it with Mexico and Canada. I think he's going to do it with China. I think we need to give him some time to be able to negotiate and reset the table to make better trade deals.
Well, he's got to negotiate also with the Federal Reserve Board, and apparently there is going to be a meeting coming up sometime over the next couple of days or weeks with Jerome Powell, the head of the Fed. They've been having this spat. But it's my belief, and this is what the president does, this is the way he negotiates. He hits hard at the beginning, and then he pulls back a little and negotiates. Look at North Korea. I think it's some of that we've seen internationally is what we're now seeing with the Federal Reserve. Do you agree?
I agree. I think he takes a position, and then he sort of comes off that position, but he comes out powerful and strong. And I think that's what we need right now. I think that we've had terrible trade deals for decades. And with regard to the Fed, I mean, the best report card for how a president handles an economy is raising interest rates. You know, under Obama, for 7 years, the Fed didn't touch the rates. And under President Trump, in just 16 months, there's been 4 moves. So to me,
that's precisely what President Trump is against.
No, I understand, but I'm just making the point that the economy is healthy enough for the Fed to raise rates. They couldn't raise rates under Obama.
But it's the president's position. I think he makes a lot of sense when he looks at the world economy and says, look, this is no time right now to be raising rates because you have an economy that is kind of teetering, whether it's China, and a lot of that has to do with our tariffs, but also you have problems in Europe, largely due to their own mismanagement of things like taxes and regulations. So I'm just wondering how the president threads that needle with Jerome Powell when he meets him.
Look, I think it's a needle that has to be thread very carefully. And
I promise not to use that metaphor anymore. Go ahead.
No, but I think that, like, as I pointed out, I think that you have unemployment at a 50-year low. You have wages on the rise. You have an unbelievable job market. I think that that's why the Fed is making their moves. So it's a problem that is a good problem, because if we were in an economy that wasn't doing well, the Fed couldn't raise rates.
But you're kind of making the case for Powell to raise rates more because our economy is so healthy. I mean, there is slippage in this economy. There's slippage in the growth rate from what we've seen. We still have, as you mentioned, a very strong jobs market, which is great. A lot of investment still going on. But you look at what's happening with the market, and we've had some pretty dicey times these past couple of months.
I would agree. I think that the Fed I think the Fed should be, they've been more tepid. They said next year they're going to have two rises. So they're coming off of their original position. And I think that's the right move. I think that you're right, that the economy, there are some signs of weakness, and we need to be careful of that.
Jason Meister, good to see you, Jason.
Thank
you very much for being here. Happy New Year to you.
Happy New Year.